What's going on with my Forex fund? Is this a notorious witch hunt conducted by the US CFTC? Or is this something that's hidden behind a veil that's finally being lifted? So what's going really on with the world's largest prop firm? Hey, it's Frank Nag and welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. If you're new here, subscribe to my channel and hit that like button. In recent news, as of yesterday, the Ontario Commission and the CFTC alleges that my Forex funds is a fraud, and they are saying that they are controlling the pricing and making the traders lose money. Through the years, my Forex funds has amassed a large fortune, upwards to $300 million, promoting trade evaluations that traders would participate in. If successful, the traders would have the privilege in trading the firm's capital. If the trader made money in their trading, the MFF, or my Forex funds, would pay them out their profit split. I personally know traders that have had success working with MFF. Success meaning that when they profited, my MFF paid them out immediately. Can't say that about most prop firms, unfortunately. Governments around the world cannot regulate a prop firm since the firm is a private company, and in most cases, and it's their intentions are for traders to trade their firm's capital to make money so that the firm can make money. At the end of the day, who is more at risk, the trader or the prop firm? Leave your comment below and I want to know what you think. Prop firms are not in the business of losing their money. It is their right to implement risk strategies that would prevent this, even if it's taking the other side of the trade. Yes, you heard me. Let's face it, most traders will lose money. And in the case of MFF, they claimed that they were trading against their liquidity provider, but they were not. In reality, the prop firms typically will have one or more licensed brokerages or liquidity providers that will execute the prop firm's trades from their traders. The brokerages or LPs typically B-book these customers and act as a market maker, usually taking the other side of the trade. This is the norm when operating a Forex brokerage business. But for the prop firm, it is challenging to decide which traders do you want in your A book, meaning going to the market, and which traders are going to be held on your B book, meaning they'll be warehouse and not going to the market. With either option, a legitimate prop firm will channel through the pricing that they receive from their licensed liquidity provider to its prop trader. I believe that it will be very difficult for the two regulators to prove willful intent to defraud traders. A jury will have to be convinced without a shadow of a doubt that my Forex fund's sole intent was to scam its traders. Nevertheless, I believe that MFF will have to fight this out in expensive Wall Street attorneys, and this can go on for many months. For now, it is a bit early in this cat and mouse chase to see how this will pan out. I believe that many prop firms that have practiced questionable trade executions are now soul searching to see if their business model can face the possible scrutiny of regulators and civil attorneys looking for a shakedown. In the end, there will be no winners. Traders will eventually get their money, and my Forex funds will need to close down for an unspecified time until the smoke clears, if it ever does.